everyone, and welcome to Money Matters with Shannon Jackson. On today's show, there's been a stark warning from the Bank of Canada. In its recent financial stability report, the central bank says our country's financial system may be holding steady for now, but rising household debt and looming mortgage renewals are emerging as critical risks. According to statistics, 60% of mortgages are up for renewal this year and next. And for those homeowners, this will likely mean increased monthly payments, higher payments at a time when households are already struggling to make ends meet. If you're among those worried about your mortgage renewal, my guest today has advice for you. She has more than 25 years of experience, and during this time, she's been the recipient of many awards. Among them, the Canadian Mortgage Professional Women of Influence, Mortgage Professionals Canada Broker of the Year, RBC's Woman of Influence in 2022, just to name a few. She's also the host of the popular Spotify podcast, Beyond the Mortgage, a sought-after speaker, and the founder of Valko Financial Ltd. With Dominion Lending Centers. Tracy Valko, welcome to Money Matters. Thank you for being here.
Well, thank you for having me, Shannon.
Before we get into our main topic, can you share with us a little bit about your background and about your podcast?
Oh, wow. Well, thanks so much. I mean, you gave me such a great bio. I don't know what else to say. Yeah, I've been in the industry for over 26 years. I say I've been in it all my life because my parents were bankers, so I grew up in the financial world. So I've really understood the different economies and how we fluctuate, from a financial perspective, from housing to real estate and the interest rates. So for me, getting into the mortgage side, it was just a natural evolution from where I grew up and really fostering that community of bringing people together. So we do a lot of community events. I'm a big advocate for mental health, and we have a mental health fundraiser, and we help support a lot of the local hospitals across Canada. And then with our podcast, Beyond the Mortgage, I'm really bringing a lot of experts in all aspects of fields where people have, started maybe a small business and have increased their business to a larger scale, or just an independent entrepreneur navigating the Canadian landscape, and just giving people a lot of hope, opportunities, tools, and education to help support them.
Well, you're definitely the right person to be talking to about our particular topic today, because we're talking about the concerns the Bank of Canada has outlined in its recent financial stability report. Of course, the biggest threat right now continues to be the volatility surrounding the trade dispute with the United States. Tariffs and uncertainty have sharply reduced prospects for global economic growth, including here at home. The Bank of Canada notes that a prolonged global trade war will have a severe economic consequences. It would reduce growth and increase unemployment. And as we know, this is something we're already seeing. According to the last unemployment numbers, the jobless rate increased to 6.9% in April, which is matching pre-pandemic levels. And here at home in Ontario, the unemployment rate is even higher at 6.8%, and expect to increase further due to the latest steel, aluminum tariffs that have come along as well. So when you take this into consideration, it's no wonder the central bank is concerned. A key reason is this all trickles down as well to our housing market, which then trickles down to our monthly mortgage payments. So Tracy, are you hearing this kind of feedback and concerns from your clients now?
Absolutely. I think you summed it up really well. This has been, one of the topics since January is a concern about tariffs. I said every year over the last, I'd say about 5 years, there's always a word that I associate the year with. And this year is tariffs. Last year it was inflation. The year before it was inflation. Prior to that it was COVID. And so, I feel that people have had challenges continuously. And with that type of mindset brings a lot of people uncertainty. It gives them unclear expectations of how to move forward with their financing, what they need to do if their mortgage is coming up for renewal, or if they're looking to make a life change and buy a home. A lot of people are just this year in particular, just hunkering down and not making a choice. And I think it's just we've continuously had a lot of hurdles where usually you see in economies, we have something that's monumental, like high inflation, and then you start seeing that relief. And we have a period of time of consistency in the market. And this year we got hit with tariffs, which was unexpected. So I think that it's more challenging for people. We have an abundance of renewals in Canada coming up. And to your point, where you said 60%, that is historically high. We haven't seen that percentage before in Canada. So it's bringing a lot of concern to people that are in this space where unemployment's gone up, just cost of living every day is expensive, and it's hitting their pocketbook. So the questions of what do I do when I'm up for renewal, we're really trying to be proactive with people and saying it's not about calling us 30 days before your renewal. It's actually, let's talk about it 12 months before your renewal so you know what to expect.
So you mentioned obviously this is a almost sort of record-setting time when a lot of mortgages are coming up for renewal right now, and the interest rate has obviously changed and fluctuated. Now we're going into a time where these mortgages that are coming up for renewal now, the rate at the beginning of their term was low, and it is definitely higher now. Now, the last review of the interest rate, there wasn't any change to that.
Correct.
But again, it's still higher than it was 5 or 6 years ago. So those people that are coming up for renewal, the interest rate is going to be quite different. Can you just talk a little bit about how that might impact them?
Absolutely. And I think that where I need to start with that is the Bank of Canada meets 8 times a year and they make a decision. The Governor of Finance, Tiff Macklem, makes a decision with his cabinet on whether we're going to keep bank prime the same, reduce it, or increase it, depending on what's going on with our economy. Now, we've had huge increases in bank prime over the last 2 years prior to, but we've had, 7 consecutive drops in bank prime, which is good because we needed it in our economy. Inflation was going down to target rate. We're actually under target rate when you take out mortgage interest and shelter costs. And so we should be seeing bank prime go down. But what's a lot of homeowners and existing people that are coming up for renewal are getting confused with is that bank prime does not correlate to fixed rates. So fixed rates are very separate. Fixed rates are based on what's going on in the US market because our fixed rates are priced on bond yields. So if the US is doing bad in their economy, then we start to see fixed rates come down. And this is where when people see bank prime, there's this momentum I find with clients that when they see that it hasn't changed, they think that fixed rates haven't changed, and that they don't. There's some correlation with the two, but they do have different elements of why they increase or decrease. So if I look at just bank prime right now, and the last announcement that we had in June, without the decrease, the market is still expecting by the end of the year to see about a 75 basis point decrease in bank prime. So if you're looking at the opportunity, if you're coming up for renewal or looking to buy and you want to look at that product of going into a variable rate mortgage that's tied to bank prime, and we see that 75 basis point drop in bank prime, let's say by the end of the year, December, on an average mortgage amount of about 600,000, which is typical in Canada right now, you would see your payment go down about $256, which is significant. Now, that's if you're in a adjustable variable rate mortgage that's linked to bank prime. But if you're on a fixed rate mortgage and you're coming up for renewal and you're wanting to take fixed, which a lot of Canadians do because we're very conservative, I find we're fiscally, very more responsible. And not that variable's not, but people want to have the security of knowing that the rate is there for like 5 years or 4 years. We're anticipating to see rates drop given where the economy is going, and specifically because of what's going on with tariffs and the impact it's going to have on our unemployment, on our economy, our GDP. And so that's going to put pressure on also the impact of what's happening in the US market because they're having the same effects. And we should start to see decreases in fixed rates, which will give people more opportunity and will help people not have that payment shock when they're coming up for renewal. So it's always a changing, it's that pendulum, right? Because you don't know what's going to happen. In the sense of every week it's changing what's going on in the US, especially on the trades and how much is going to impact us. But overall, you can see the lagging indicators of inflation and us going into recession. And that should be dropping not only bank prime, but we should see bond yields come down, which will drop fixed rates.
Now, you talked a little bit there about sort of the options that we have at renewal time. And you sort of have, we have the option to just renew with our already existing financial institution that we have, or
Mhm.
we also have the option to refinance maybe with a different lender. And just starting with that renewal side, you mentioned there that typically we as Canadians are a little bit conservative. What kind of people might want to consider the renewal option?
So it's a great question. And because we've got so many renewals coming up right now, we've really niched in terms of being able to help people look at what strategies to do. Because to your point, there is a lot of options you do have at the time of renewal. You can just renew. You will get the federal government has legislated that banks, lenders, credit unions, if you have your mortgage with it and you're coming up for renewal, they have to provide you a mortgage renewal statement at least no less than 21 days before your renewal date. I think that changes depending on the lenders. I see people getting them either before that or even closer to. So even though that legislation is in place, I do see clients not getting that in advance time. But you will get options as long as you've been making your payments on your mortgage, you haven't defaulted. You will be given some terms on that renewal, and you can just renew without getting pre-qualified again. So if clients are in a place where they're unemployed, they've been laid off, and their mortgage is coming up for renewal, they can look at just renewing their mortgage if they're given one of those terms, but we have to make sure they can afford the payments, right? So that's where it becomes challenging, and we can look at some other opportunities. There's also the opportunity at renewal to look at, do you have outstanding debt? A lot of Canadians right now are holding outstanding debt, at least a minimum of about $70,000, which is significant. We can look at rolling that in at the time of your mortgage, adding it to your balance, extending your amortization out to help with payment shock. And that way there, maybe even giving you a little bit of cash flow for a buffer, depending on what's going on in your life. And that will help people get a new fresh start and be able to, deal with their financial well-being, I say, for the next term that they have. So there is lots of options out there, but you have to sit down, and everyone's situation is different to the next person. So when you're talking to your friends and your coworkers, you really have to then go speak to a mortgage professional so they can break that down for you and give you options.
I absolutely agree with you. I think, and we are going to touch on this in the next segment, but you mentioned already reaching out early is absolutely a good strategy, and talking to that professional. And we'll be able to go into details on that in our next segment, because it's clear with homeowners that are facing renewal. Yes, we have options, but we need to know what those options are and talk to the right people so that we can make that educated decision. And obviously, we want to get the best advice for ourselves. And that's where the advice of a mortgage broker can help with that. And Tracy's going to explain those options to us when Money Matters returns after the break.
This program is brought to you by Rogers Xfinity, connecting you to more of what you love. Visit Rogers.com for more details. This program is brought to you by Rogers Xfinity, connecting you to more of what you love. Visit Rogers.com for more details.
Your go-to Metro is now open in South Barrie. Enjoy expertly cut meats from marbled steaks to store-made grilling trays, perfect for barbecuing or roasting. Visit Metro at 640 Mapleview Drive East for grand opening deals, or shop online at metro.ca. Your new go-to Metro is now open in South Barrie. From just picked fruits to crisp Ontario greens, we have what's fresh, local, and full of flavor. Visit Metro at 640 Mapleview Drive East for grand opening deals, or shop online at metro.ca.
Welcome back to Money Matters with Shannon Jackson. My guest today is Tracy Valko, host of the popular Spotify podcast Beyond the Mortgage. She's also a speaker, multiple award-winning mortgage broker, and founder of Valko Financial Ltd. Within Dominion Lending Centers. And Tracy is sharing her expert advice on mortgage renewals. With 60% of mortgages coming due this year and next, homeowners facing a renewal have a lot to consider. Higher interest rates today compared to a few years ago when these mortgages were first negotiated will likely mean higher monthly payments. Some could be several $100s more. Now, this increase could mean additional financial strain at a time when many households, including here in Ontario, are finding it hard to make ends meet. Now, Tracy, before the break, you talked about how homeowners do have options, and we can talk about ways to try to keep that mortgage payment down. And there's lots to consider. How can a mortgage broker help a homeowner choose that right option for them?
Well, I think the first thing is we really need to understand where people are with their financing, with their employment, and also where their goals are, because people's lives change, right? And a lot of people in Canada do move to different provinces for affordability purposes. They may be looking at downsizing or upsizing because their family's growing and need to move into maybe more affordable area. So we really need to break down a lot of these, goals, these aspirations that individuals and families have, and then look at where they are with their financing, where they are with their employment. Like, a lot of people in Canada don't just hold one job anymore, they hold multiple jobs. So what does that look like for income? Is that something that we can use to be able to help qualify? Do you have the cash flow? What do you have in savings? So how can we help grow your savings? Even in challenging times, there are opportunities if people have cash flow. And where are you at with your debt? So we take a look at credit, understand where people are with outstanding balances. And I find there's this big spectrum of people that are over leveraged with credit. And it could be circumstance, it could be they've lost a job, or there's been a health issue and they've had to pay for medical bills, or just life takes us in different directions. It could be education for their children. And then there's another spectrum where I find people haven't used credit at all. And that actually ends up being a disservice for people, because what happens is that people that don't use credit don't have a credit score. And that can be challenging if you're looking to restructure your mortgage. So it's really looking at people's holistic perspective of their credit, their income, and see what their goals are, and then working out strategies for people, right? Depending on, do we need to consolidate your debt? What does this look like into a new mortgage? Do you have the equity in your home? Have you not touched your property in terms of that financing over the 5 years? Are we able to look at the value versus where your mortgage is and your debt and combine it together so that we can actually decrease, help you decrease your interest that you're paying on your debt, but also look at ways that we can help you with your cash flow on a month-to-month basis. So it takes a lot of time to do that, but once we do, then we help people, give them clarity, and I call it financial wellness. So we can help them on a path of getting them in a great space at the time that they're up for renewal, getting them into a product that's going to work in these times, and then help them on a financial plan so that they are in a better position going forward.
Now, you mentioned there, because there's a lot of planning, I think, that goes into these conversations with the mortgage broker. How far in advance should somebody reach out to someone like you before that renewal time?
Yeah, so I feel that people need to come well in advance. They need to at least come 12 months, I say, before you're up for renewal, if they can, because understanding where you are with your credit, understanding where you're at with your employment, we may have to look at, if you're self-employed, we may have to restructure your actual bank statement so that where you're putting your income in, maybe we tell you to put it into a business account if you're just putting in a personal account. So it's getting ahead so that when you're up for renewal, we're able to give you the best mortgage products that are available and the best strategy and solution. And it's also helping people, if they do need to have credit challenges, we can help maybe look at repairing your credit so your credit score goes up before you're actually up for renewal. So the more we can get ahead of that, the better than at the time closer to renewal. Having said that, we've had a lot of people come to us at least 3 or 4 months before, which is great. I say any time before is always a good time to help with strategies. But what I'm seeing more now that we have so many mortgages coming up for renewal is that people are being proactive. They are really concerned about their financing because of the current economic condition we're in right now. And they're looking at ways to be able to manage that in a better position, right? So that they don't have to worry about if they can find out today what they're doing, it'll help give them some clarity, even as they navigate some of these times, right, in the economy. So there's some really, even though there's challenges in the economy, there's some good opportunities right now, and I'm finding clients getting ahead of their financing to look at options.
Obviously, one of the things that we think about when it comes to that mortgage renewal is it's always going to be that interest rate. And we know, and I think you mentioned as well that the interest rates could potentially still come down even more, even before the end of this year, it sounds like. So when it comes to that renewal time, we're going to be considering either the fixed term mortgage or maybe the variable rate mortgage. And either option has, I think, some pros and cons. If I can start maybe just with that fixed rate mortgage option,
Sure.
what kind of advantages or maybe disadvantages are there to that choice?
So when you're looking at a fixed rate mortgage, we'll go with the advantages at first, is that you're getting the security of that rate and what your payment will be at the time that you're coming up for renewal. So no matter what's going on with the economy and also with what's going on maybe with your employment or your family, you'll know every month where your actual mortgage payment is based on what that rate is at the time that you're coming up for renewal. And when you look at it historically in Canada, there's more than about 70% of Canadians that do actually take a fixed rate because they do want that security in terms of knowing what managing their payments. I mean, everybody does want security, but it gives people that peace of mind that no matter what's going on in the market, my rate is going to be this for the 5 years, and this is where my payment's going to be at. And given the influx that and changes and the challenges we've had over the last 5 years, it's been really challenging for people to be able to look at other options like a variable rate mortgage, which in this time could be a very good option because they want that security because the market's always changing and we're always having these challenges. So when we're sitting down and talking to clients, we're really educating them on the mortgage products. We're educating them on the terms. We're educating them on what a variable rate mortgage is as well, so that they understand that. But then we also look at their situation. So if they're first-time home buyers, probably not going to a variable rate mortgage is the best option right now. Taking a fixed rate so you know where your payment is and gives you that stability is going to be probably the choice that we're going to recommend in this time. So that's on a fixed rate side. And you can look at different terms. There's 1, 2, 3, 4, 5 year terms that you can take. And that's all depending on, again, where you are in your life. We might have to put you in a shorter term because maybe you're looking to move to another province or, you're looking to sell your home, right? You're looking to maybe downsize. So we can go into a shorter term. That way you're up for renewal. You have no penalty to break your mortgage. And we can give you some options and choices. Now on a variable rate mortgage, that's a different product. That's linked to Bank Prime, and Bank Prime changes. Like the Bank of Canada meets 8 times a year, but they don't have to change the rate. It depends on what's going on with the Canadian economy. So they either keep it the same, decrease it, or increase it. And in a variable rate mortgage, if you take that product, your rate will go up or down depending on if that Bank Prime changes. It's not stagnant. It does not stay the same like a fixed rate. So the advantage of that product is as Bank Prime goes down, your rate will go down, which means you're saving a lot of money on interest costs. And the other benefit on a variable rate mortgage is that you have the opportunity at any point in that product to convert it to a fixed rate. So when the market goes down and we see interest rates coming down, a mortgage professional should be able to help that client navigate when they need to lock into that mortgage with the same lender, and there's no fees and penalties. So there's a lot more choice with variable. It really puts you what I call in the driver's seat when you're looking at that mortgage product, and it helps you save thousands of dollars potentially on interest depending on where the market is. But it's not for everyone. You have to really look. I usually look at it for people that are maybe in their second time coming up for renewal because they've got more equity, they're more solidified in their employment, they've got more savings, so they've got a buffer in case the rate goes up. But it's not for everyone. And in this market, it's really sensitive to what people actually can withstand in the economy because we've had so many challenges. But those are really the two that are the biggest players right now in the Canadian market space.
It's so interesting that you mentioned that if you're in that variable rate option,
Mhm.
that you can choose to lock in really at any time. So if you're of the mind where you're okay with a slight sort of inconsistency in maybe the whatever the monthly payment is going to be, but knowing that if it's predicted that perhaps rates may continue to decline, that you then have the option to switch it to that fixed rate at any point. I think that could be a great advantage.
Absolutely. And a lot of people do. Like, it's when I look at it, I built a lot of my business with my clients on a variable rate mortgage, and we're really helping the clients. And it's also helping us stay in touch with our clients a lot more because we're giving them updates, we're sending them newsletters, we're calling them, we're letting them know what's going on. They're more educated, I find, on the economy because they're in a product that they really need to. We navigate and help them with it, but they also want to be in tune with what's going on as well. But being able to take that lower rate at a time, maybe they're 2 years into their mortgage and then they lock into that lower, 5-year fixed rate, can save them thousands of dollars. Like, I've really helped a lot of people through that. And it helps them even be in a better position when they come up for renewal because they've been able to bring down their principal on their mortgage, right? They're not paying as much interest. The next term they might end up taking a fixed rate because fixed rates may be at a lower point and it makes sense for them at that point. But it is a great product if people can understand it, have some tolerance and flexibility of what's going on in the market, knowing that, bank prime does go up and down. I mean, it always does, right? And so it's always ever changing. But you do get a discount on that variable rate mortgage. So the banks, lenders, and credit unions on a variable rate mortgage, depending on where the market is, like right now, we're looking at about a 50 basis point reduction on bank prime. So that 50 basis points is set for you for the term that you have your variable. So if you're in that variable for 5 years, you're going to get 50 basis points off of bank prime. So bank prime today, for example, is 4.95%. You're getting 50 basis points off of that. You're at 4.45%. That's actually in a great rate right now, given that fixed rates are around there. But as bank prime is supposed to be going down, what's going to happen is your rate's going to be under where fixed rates are. And so people can really get ahead by taking a variable, but it's understanding your risks, knowing what your strategy is going forward, knowing what your goals are, and making sure that you truly understand the product before you take it.
Well, Tracy, thank you so much for the information you've been able to give us. For any one of our viewers who want to connect with you, maybe on social media, listen to your podcast, how can they do that?
Well, thank you so much for the opportunity. For anyone that wants to reach out to me, my podcast is on Spotify. I'm very active on social media, so we do a lot of videos and a lot of educational and seminars. So you can always reach me on my platforms on Instagram, TikTok, Facebook, on LinkedIn, just under my name, Tracy Valko. And you can also look up Valko Financial as well, and you can reach out to me on any of those platforms.
Well, Tracy, again, thank you so much for being here and taking the time to share your expert advice with our viewers. And I also want to thank you, our viewers, for watching. Until next time, I'm Shannon Jackson.